likelihood that America and most of the rest of the world will be in recession. There's the probability that wars in Europe will escalate, wars in the Middle East will escalate, that there is a risk, and I emphasize risk, that a cyber attack will shut down bank computers and possibly also airline and electricity grid computers. The cyber attack could actually be undertaken by the G7 countries' intelligence services, obviously to accuse Russia for doing it, with the objective of when the system is reopened, that they introduce central bank digital currencies. What does this mean for markets? First of all, markets have been assuming that everything is hunky-dory in the world, that valuations are being priced for a stable world, and that a shock will come unexpectedly to most market participants. So that we will see by the end of this year or early next year, to take the S&P as an example, a 40-odd% correction in the S&P index down to 3,000. Most other markets will follow suit. It means also that inflation will remain sticky, putting it politely, and that the Fed will be reluctant to lower interest rates this year. In fact, there's probably a debate going on within policymakers in Washington. Do we defend the dollar or do we defend the treasury markets? Obviously, those who voice for defending the dollar would be the neocons, since it would be part of their posturing to retain America's hegemony. So the likelihood is that the dollar will remain at around current levels before declining sharply next year. I think the big risk to markets is that if, as I think very likely, that wars escalate, then Japan will be wanting to bring back most of its foreign investments, which at the end of last year totaled something like 4 trillion. That would have massive implications for financial markets, since it would be the end of the carry trade. So really what I'm saying is that the world is sitting on a precipice, that there will be shocks coming in the second half of the year, which will impact financial markets, commodity markets, and the way you and I spend our money. To hold assets outside the banking system, to hold physical assets like precious metals, gold in particular, because I think within a very few years, probably within 3 years, within the BRICS group of nations, gold will be back in the monetary system. But I think the other very important asset that people should hold, particularly households, is food. Food is going to be in short supply. Somebody, for instance, told me that one of the burger chain restaurants in America is no longer selling beef burgers because they have no beef, chicken burgers. So it's very important to hold enough food to last not just for a couple of weeks, but for a year or so. I mean, I have advised my son's family and my daughter's family to do likewise. The food is going to be in short supply, 1, because of the wars, 2, because of disruptions to supply chains. I mean, even here in Dubai, I find that my usual red wine, the hotel's out of stock. Which doesn't mean the hotel's out of stock, it's their supplier is out of stock. So already, if you look around, there are pockets of short supplies. So just wait until we have the real shock. It's going to be nasty. So having enough food will be your savior. Not what you hear or mostly read from investment banks, I have to say, but I've been involved in the copper industry ever since a child, when my father was involved in it in northern Rhodesia, now Zambia, and I worked for 2 major copper companies. My take is this: physical consumption is weak globally, and it's particularly weak in China. There is plenty of copper. Most of it is being held outside the exchanges. But even in China, on the Shanghai Futures Exchange, you've got 300,000 tons of copper. There will probably be a small surplus this year. Next year, so I should come back to this year. What we've seen in this massive spike in prices was funds and banks going very long of copper futures, in the process squeezing people on COMEX. Metal is being diverted to COMEX, which will start arriving in COMEX warehouses early next month. The fact that copper consumption will get even weaker as the world evolves into recession, so that consumption will be weaker than the possibility of a fall in production. There's the risk of at least one big strike in Chile and the potential for a strike in Zambia and DRC because of very high inflation, and workers will be demanding a big increase in wages. So I think that by early next year, copper prices will fall to below $7,000 from the current, wherever we are, 10,500, something like that. But next year is going to be very interesting. One, the dollar will fall sharply because the Fed will be unleashing, with a new government, will be unleashing a huge monetary and fiscal stimulus. Two, there will be a recovery in physical consumption. China will be recovering quite sharply by the end of this year, and the ECB will also be stimulating. So we see, first of all, a recovery in actual physical consumption. Secondly, the dollar falling, inflation rising, manufacturing will add to inventory of physical copper, semis, products, etc., right through the whole manufacturing chain. So let's say that real physical consumption rises by 4% next year, which I think is probable. You probably need to add on another 2 percentage points to allow for manufacturing restocking. So you get a 6% increase in physical consumption. Add to that, you'll have the funds going crazy again, as they always do when the dollar falls and inflation rises. They look for their hedges, one of which is copper. Production will probably be rising a tad, but not dramatically. So on our numbers, we look for a deficit next year, a proper deficit, not one that is put out by many of the investment banks this year, a real deficit of around 900,000 tons. So prices go from a low of, say, 7,000 tons by early next year to around 14,000 tons, or doubling in price. When are we? We're in 25, 26, in the early months of 27. That may appear sharp, but go back to 78, 79. The pace of 12 months, copper prices rose by, I think it was 75%. What happens then? Problem is that with high inflation, global inflation probably around 15%, and US inflation around 13%. What do the bond vigilantes do? You don't like it. So you take 10-year treasuries, yields will be rising over 10%, and global long-term bonds equally, if not more. What does that do to a highly indebted system? It's going to crash it. So all asset prices, other than food, precious metals, will collapse. I won't give you numbers for where we see the S&P, because you need a big dose of whiskey. And you will see copper prices and other base metal prices at levels that are outside people's comprehension. So we then move into a completely different era, which will be not just one of financial panic, but real wars, both within countries and between countries. And I think that's going to be 5 to 7 years of very nasty and difficult times, at the end of which the world will be restructured. It will be no longer, will it be an American hegemony? It will be a multilateral world led by China and Russia, and we will get peace. Inflation will have been killed. The way forward won't be debt, it will be equity. And we enter the next long-term global 40-year period of growth, back to what the average we've seen since 1900 of GDP averaging 4% a year. Problem then is what currency will copper and other base metals be priced in? If you look back, profits that copper producers have made since 1980 are illusionary, because a $1980 today is worth 25 cents. Slowly, I think developing countries are realizing that linking prices to dollars is not the way forward. So I think the way forward, within 5 years, if not within 3 years, BRICS members won't be 10, they'll be 40. And those additional members will include a number of base metal producing countries. So you go back to old Connolly's famous words, commodities are our assets, but your problem. So that really comes back to what sort of currency should we expect from the BRICS. The first step is obviously going to be using blockchain technology and others to create a trade and an investment platform that obviates the need for the dollar, i.e. local currencies. The stage will come quite soon when China will announce our currency is backed by the gold which our citizens hold, which, based on numbers that friends of mine have done, is about 23,000 tons today. and in which, in recent months, China's government has wanted its citizens to increase their gold holdings by the PBOC setting up platforms that households can buy gold physically off the Shanghai Gold Exchange from their bank accounts, even on a monthly payment system. So when that happens, I think Russia will follow suit and say the ruble is backed by the gold that we own, which is over 12,000 tons and increasing by 300 to 400 tons a year. So the next stage, and I don't have details, but one can suspect that BRICS will develop their currency platform linked to gold. Just as quietly, Russia is linking the oil price to ounces of gold. That's the way forward.